If you've been watching ICT and still feel lost, I get it. I was in the exact same position that you are in 3 years ago. I watched over 300 hours of content and I was still getting confused. But here's what changed everything. I boiled ICT down to one single concept. And once I understood it, I went from getting confused to getting results like these. This one concept can save you hundreds of hours of learning and thousands of dollars in trading losses. And even if you are a complete beginner, you will be able to use it as long as you understand the 3 questions that I'm about to show you. As day traders, we have one job, which is to trade the day, which means getting in on a position and out within the single day. Well, that means that we do not care what happens 1 month from now. We don't even care what happens 1 week from now. The only thing that we care about, what is the day going to do, which means our one focus is forecasting where the daily chart is going to go. And this is where the concept of daily bias comes in. Daily bias is the most important concept within trading for one single reason. It teaches you the direction of the market. And a profitable trade is just the right direction with the right execution. But first, if you do not have the right direction, then you will not be able to become profitable because you will be shorting on bullish days and longing on bearish days. And that is what daily bias solves. And the daily bias can be boiled down into just 3 simple questions. The first one being, where is price now? And keep in mind that the third question is the one that is going to simplify this process the most. So, where is price now? The reason that we ask ourselves that question is so that we identify the key levels every single day. Now, to find where price is now, we need to be able to define all of the daily fair value gaps and all of the daily order blocks that are closest to price. Because like that, we will be able to see if the market is close to bullish order blocks, so it is close to bullish order blocks, bullish fair value gaps, if it's close to bearish order blocks and bearish fair value gap. Now, for traders who don't know, fair value gaps are simply a 3-bar pattern where the first candle high and the third candle low do not meet, creating a gap. So this is for the bullish fair value gap. The bearish fair value gap is also a 3-bar pattern where the low of the first candle and the high of the third candle do not meet, creating a gap. And the low of the first candle and the high of the fourth candle create this gap, which is called the fair value gap, which you can see was respected and the market moved down. But let's go back to the most current price. So we mark out all of the order blocks that are closest to price, all of the fair value gaps, and all of the highs and lows. So in this case, we have the high and we also have the low. But notice how we also have this bullish order block, which is the down close candles on a bullish trend. All of the down close candles on a bullish trend are going to form a so-called order block. So we have a bullish order block and a bullish fair value gap. And then the next question is going to be, where is price going? And this is where understanding one concept is very, very important. And that is that the market is always cycling between bullish and bearish higher time frame key levels. So for example, if right now we are at a bullish fair value gap and at a bullish order block, the market needs to go towards a bearish level, which in this case, on the daily chart, the only bearish level is actually the high. So when we ask where is price going, then it can be the candle open, for example, the candle high, and even the external high, even though external highs usually take longer to play out. So where is price now? Price right now is at bullish key levels. Where is price going? Price, we expect the price to go towards a bearish key level. And so we expect the market to react bullish. And this is where on the next day, the market reacted from the bullish key levels again and went towards the bearish key level, which was the candle open. Now, my goal with this video is to show you how to find the direction on a daily basis. And the third question is going to fully simplify that process. But I want you to understand that, for example, the key level that we marked out is actually an order block on the lower time frame. But let's not get ahead of ourselves. Let's stick with the daily chart because we are day traders and we want to find out where the market is going on a specific day. And this is where the third question is really going to help, and it's going to change your trading forever. And the third question is, what is the market choosing to respect? Because as you can see from this exact example, we can see that the market is choosing to respect all the time. It is choosing to respect the bullish levels. That means that our daily bias is going to be bullish because the market is choosing to respect the bullish levels. And you can see that as the market is choosing to respect bullish levels, our daily bias would be bullish. So on this specific day, it would be bullish. And on the next day, what is the market choosing to respect? Still the bullish fair value gap and the bullish order block. And where's the market going? It's still going towards this high. But since it's an external high, notice what I said before, it's going to take a little bit longer to get there. Now, what is the bias for this next day? Well, let's answer the questions. Where is price now? Price is still around the bullish fair value gap and bullish order block. Where is price going? It is aiming towards this high. And since we just respected a bullish order block and fair value gap, then we expect the market to go towards the next bullish key level. Then now we expect the market to go towards a bearish key level. And if you want to simplify, you simply ask, what is the market choosing to respect? Well, it's choosing to respect the bullish order block and the bullish fair value gap. And so on the next day, our daily bias would be bullish. So we would only be entering in long trades. And you can see that the market had a very strong push towards the upside. Now, let's just ask the third question now. What is the market choosing to respect? The market is still choosing to respect the bullish fair value gaps and the bullish order blocks. So therefore, where is price going? We still know that it's going towards the high, and it's choosing to respect the bullish order blocks and bullish fair value gaps. So our daily bias would still be bullish. Therefore, we only enter in long trades. And before I show you what happened on the next day, I want to show you one more thing. Notice how we had this impulsive move to the upside, and we know that on a bullish trend, every single down close candle is an order block. So right now, we have created a new order block because the market has closed above it. So this is now an order block, another bullish order block that the market is choosing to respect. And so on the next day, the market comes towards the order block and moves bullish. So once again, if you would have entered in longs on this day, you would have won. So right now we are 3 for 3 on daily bias. And then let's go back to the questions. What is the market choosing to respect? The market is still choosing to respect the bullish fair value gaps and the bullish order blocks. So therefore, the market comes back towards the fair value gap, back towards the order block, and then goes towards the high. So the daily bias and the daily direction can be simplified into one question. What is the market choosing to respect? Obviously, this will go back to the question of where price is now and where do you think that price is going. And by doing that, by understanding what is the draw of price, what is the magnet of price, and knowing where the market is at now, you will be able to define your daily bias. And this happens every single day. And the way that this is going to help you is that every time the daily bias is bullish, you do not enter in short trades, meaning you are not going to sell. And every time that the daily bias is bearish, you will never long, because you know that at the end of the day, the market will be moving down. It will be moving bearish. Therefore, when the daily bias is bullish, you will only enter in longs. And when the daily bias is bearish, then you will only enter in shorts. This is the concept that has completely changed my trading forever. And this is the only concept that I needed to learn from ICT in order to become profitable. Now, if you want to see my bias every single day, I share it inside of Funded Trading Blueprint. This is the second link in the description. You can get funded guaranteed in 90 days. You get daily market breakdowns before the market opens. You get 24-hour access to me because I know that you've joined other mentorships, or maybe you've never joined a mentorship and you know that mentors are not present. I have shared in just about a year over 15,000 messages, which means over 1,000 messages a day. So you can ask me whatever questions you want. And the daily bias is shared every single day. So yes, what changed my trading every single day, the daily bias, I share it on a daily basis before the market opens. So you're never lost and we can guarantee that you get funded within 90 days. And so if this is something that interests you, then check the second link in the description. And if spots are still open, you will get the chance to talk with one of my team members that will see if you are the right fit to get funded in just 90 days. And in case you are already profitable, then make sure to check out the prop firm Funding Ticks, which is the best prop firm out there in the market with the best accounts, best pricing, and with code Kimmel, you can get up to 50% off. So with that, I hope this helps you as much as it helped me. Check the video on screen to see how I trade every single day, and I'll see you in the next video.